What's up, boys? Today I'm going to show how this exact same trading strategy that I use is making me over $6,000 every month. So let's get started. Okay, so ready for market opens. Right here, we go on our higher time frame, and we are looking for our bias. We want to determine our bias. So we go on a 4-hour time frame, and then before market open, we can see that here, right here, we have this unmitigated, or we had this unmitigated 4-hour parallel gap resting right here. So now we scroll on 5-minute time frame, not 5-minute time frame, 1-hour time frame. Then we can see we still have over here this unmitigated 1-hour parallel gap over here, and we mark that also. And then now we scroll on a 5-minute time frame. That's our lower time frame. And now we wait, because overall, as we can see, we are in bullish trend, and now we are only going to take longs. So okay, cool. Now what we do, market opens, and what it does is it manipulates to downside to our PD areas, or how I call it, our areas of inversions. Okay, as we can see, market dumped straight down to our 4-hour unmitigated parallel gap and 1-hour and 4-hour unmitigated parallel gap right here. And now what we can clearly see is that we left this big imbalance over here that needs to be inversed if we want to take longs. So okay, cool. We continue to go up. Then we have this fake order here. Then after that we can see that we had this 5-minute parallel gap holding over here, and after that we simply just wait for it to get inversed. Okay, cool. We can see the gap got inversed. So that what does that mean? That the bearish order flow is getting disrespected and the bullish order flow is getting respected. Okay, so after that inversion, we enter right here. Stops will be below the candle that inversed the gap, and then our take profit can be this devil's wick over here with a 50-minute unmitigated parallel gap over here, and our final take profit can be all the way over here at 9:30 open, and as we can see, the trade hits our take profit. After this 1-to-1 that we had over here, we can close, or 1-to-7, we can close half of our positions and leave a runner to this 9:30 open, or even if you're comfortable enough, we can even left another runner all the way up to London highs. In this high bullish market, that is pretty possible. So this was the trade I took today, but I closed my half of position here at the 50-minute parallel gap with devil's wick right here. Then after that, after I closed the partials, I moved my stop loss to break even and left a runner to this 9:30 intermediate high and 9:30 market opened wick over here. So that was example number 1 in real-time trade. Now I'm going to show you how does that look when we just draw the markets. So okay, let's say our high time frame is bullish, and then what we have left over, we have this parallel gap over here with a intermediate low resting over here. And now what we wait for? We wait for the price to sweep this intermediate low. And now what we do? We switch on our, that was, in this example will be with 5 minutes, and that should look like something, the 5 minutes should look something like this. And then what we do, we enter in this 4-hour gap that we created with this intermediate low over here, or we can say it was intermediate low with London lows inside of that gap. And now what do we wait for? We wait for gap for fair value gap to be inversed, and we inverse the gap right here. Let's say for this example this was a 5-minute gap. Okay, we inversed this 5-minute bearish fair value gap, and what we can do now, we can enter right here. Stops would be below the candle that inverse the gap. Let's say that was right here, and then we can target a simple 1-to-1, or we can take a session high, like that. Let's say for example this was a London high, and we can take London high for our target. That's in this example, that's a bullish trade. Now let's get into a bearish trade. Okay, now on a 4-hour time frame for a bearish example, we can see that we are in clear downtrend, and we have this intermediate high with a London highs inside a 4-hour fair value gap. Now what we do, we go on a 5-minute time frame for this example, and let's say on this time frame on 5-minute lower time frame, we can see for example that here is this bearish fair value gap, this bearish 4-hour fair value gap over here with a London, let's say for example London high resting all the way over here. And now what we do, we wait for price to enter 4-hour fair value gap, wait and sweep the London highs inside of it, and now we create the 5-minute fair value gap over here that we inversed, and after the inversion we go and take a short position right here, stops above the candle that inverts the gap, and let's say our take profit will be a simple 1-to-1, or maybe let's say the market was before that, we created here a 4-hour, let's say for example another 4-hour bullish gap over here, and then we can even take the bullish gap that's over here, or just take another session liquidity that was resting over here, for example. So, and this also works on a time frame. If for example we don't have 5-minute fair value gap, or we have, let's say, the highest time frame version was, let's say, 3-minute, so we wait for a 3-minute gap to get inversed, and is the same for that also. 3-minute is the highest time frame version fair value gap, and we wait for the price to inverse that, and then we simply enter again here. The stops will be above the gap, above the candle that inverse the gap, and just simple targeting the liquidity resting below us, or simple 1-to-1. And that's the basic model trade with inversions. Or now we can go with the continuations. Let's see, for example, we had this trade that my friend took over here. When the price entered this 5-minute gap over here that we created, as we can see, it was a little gap, but the gap got respected. And after that, we wait for price to enter right here on the higher time frame. 5 minutes is the highest time frame gap for continuations. So we wait for a candle to go inside a 5-minute gap, as it was all the way here, in this gap all the way here. Then we wait for our highest time frame inversion. In this example, it was I think 30 second. So we enter the 30 second was, I think, all the way here, if I remember correctly. and now we can put our stop loss below the candle that entered the gap, or if you want a tight stop loss, we can put it at the candle that 1 minute candle that inversed the whole gap, not only 30 seconds. And then for example that I show you, you can aim for a simple just 1 to 3, targeting this 9:30 market open, or leaving a runner and going for long highs. Now I'm going to show you example with this structure right here, at price under for a fail gap. Okay, we inversed this gap that was created, let's say over here. You inverse the gap over here, and you missed the move because you weren't too comfortable of taking. So what we do now, we wait for a price to retrace in a new created bullish fair value gap in this example. That was over here. After the inversion, as I said, stop loss would be below the gap, below the candle that entered the gap, and then we are targeting a simple 1-to-1, or you can target a session liquidity, maybe this a mitigated fair value gap over here, or let's say London highs that are resting all the way over here. Now I'm going to show you the bearish example. Okay, for this bearish example, okay, price entered for our gap right here. Then we got this inversion over this 5-minute inversion over here, and as I said before, you aren't too comfortable of taking the first inversion, so you're going to go with a continuation. So what we wait now, we wait for a price to retrace into this new created bearish value gap, and then we are continuing lower. So what we do now, after the price entered here, we enter all the way right here when the candle leaves the gap, stops above the candle that entered the gap, and then we are taking, let's say 1-to-1, that was over here, or we can take session liquidity over here, or London lows, for example, or Asia lows all the way over here. And continuations best work on a 5-minute or 50-minute time frame. That's what you need to remember. So our strategy is covered with inversions or continuations. So for inversions, we wait for price to enter our hard time frame PD areas and wait for a high time frame inversion as entry. That's between 1 minute and 5 minutes, or if you're a more experienced trader, from a 50 seconds, 30 seconds to 5 minutes. And for the continuations, we wait for price to enter hard time frame PD areas and wait for a high time inversion, and then retracement to a new 5-minute fair value gap that was created, or a 50-minute fair value gap that was created. And that's about it. If you want to see live execution with this, I'm posting it on my TikTok every day. And if you want me to go a little deeper in this strategy and backtest it for you guys, so you can see it works, leave a comment, leave a like, and I'll see you guys tomorrow.